Okay, hi everyone. Welcome to this week's webinar. So we're just going to give about 2 to 3 more minutes to let more people join our session before we get started. So in the meantime, let me know if you guys can hear me and can see me as well as my slides. And yeah, feel free to make yourselves comfortable, grab yourselves a drink, and we'll begin in about 3 more minutes. Thanks everyone. Okay, thank you guys for waiting. Let's go ahead and get started. So, as per usual, before we get started, a risk warning as well as a disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. Disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie and I will be your presenter for today. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here is our agenda for today. We're just gonna look at the anatomy of a trade, followed by a recap of what we talked about last week, which was dynamic take profit as well as stop loss placement. And then we'll get into this week's content, which will be on break even as well as partial profit. Okay. So the anatomy of a trade consists of the basics, which are mainly entry, stop loss, as well as take profit. But of course, there are other parts as well that constitute a trade, such as your break even, partial profit, trading stop loss, as well as idea invalidation. So today we're only going to be talking about break even as well as partial profit. But if you are interested in trading stop as well as idea invalidation, stay tuned for next week as well as the following week's webinar where we'll go through those in depth. Okay. So just a recap, we typically advise you to place your stop loss beyond a major resistance area and your take profit before a major resistance area. Okay, so that's just the general rule of things. Okay, so let's get into break even. So break even in trading refers to the point at which a trade reaches a level where the trader has neither made a profit nor suffered a loss. So it's basically the point where the cost of the trade, including fees and commissions, is equal to the price at which the trade was executed. Okay, so for example, if a trader buys a stock at $100, right, and sells it at $110, the trader has made a profit of $10. But on the other hand, if the trader buys a stock at $100 and sells it at 90, obviously they've suffered a loss of 10. However, if the stock is sold at 100, the trader has neither made a profit nor a loss, and the trade has reached its break-even point. Okay, so that's in the context of stocks, but we'll talk about the context of Forex in a little bit, but it's kind of the same idea. So break even is basically a concept in trading because it helps traders to determine the minimum price that they need to sell their trades in order to cover their costs as well as avoid a loss. Okay, so it can be helpful when determining when to close a trade and take the profits or cut losses altogether. Okay, so this is how it works. Okay, so break even is the level where you are in profit, which is over here, the first point. You're in profit, you recognize that there is a risk of reversal. So if you follow this based on the numbers, firstly, we have our entry, which is at this double swing high here, double swing high resistance over here, and then we are going in for a buy entry on this breakout of this resistance level. Okay, and we're hoping that price will push upwards towards our excuse me, towards our take profit level, which is this green area here. Okay, so we see price testing this area here, and then our break even is triggered at this break even level, which is just at this swing high resistance level. Okay, and then it reverses, it's triggered at this level, and then it reverses down, and that's where we modify our stop loss and move it from this original stop loss, which is way below over here, and we move it to our original entry level. Okay, and the reason for doing this is so that if price continues to rise, of course, we'll still get our profits. But if it reverses, we'll just take our profits and get out of the trade at break even. Okay, and you can see, even though it did reverse off and was kind of heading towards our take profit, it's a good thing that ultimately we had placed our stop loss here because price did reverse and hit it back down to our entry and stop loss. So if we had left it at this stop loss level here, we would have made huge losses, whereas here we're just getting out at break even. Okay. Okay. So now let's talk a bit about partial profit. So partial profit is basically refers to the practice of closing only a portion of a trade when it reaches a certain profit target, while leaving the remaining position open in order to potentially capture further gains. So the idea behind partial profits is to lock in some of the gains while giving the remaining position room to potentially continue to move in the desired direction. So basically, it's typically used when there is a strong resistance area and you are unsure if price will rise to take your take profit. Okay, if we look at another example, but in this example, we're talking about stocks and shares. So if a trader buys 100 shares of a stock at $100 and the stock rises to 110, the trader might choose to sell only 50 shares, taking a partial profit of $500, which is $10 per share times 50. So the trader would then still have 50 shares that are now worth $550 and could potentially continue to make profits if the stock price continues to rise. Okay, so in the context of trading, it can help you to manage risk by allowing you to take some profits off of the table while leaving room for further gains. It can also help to improve the average price of a trade if you decide to add to the position later at a lower price. However, it's important to note that you should have a well-defined plan for how you manage partial profits, as leaving too much of a position open can increase exposure to risk. Okay, now let's look at example number 1. Okay, firstly, we have our first support as our entry over here. And our first support is an overlap support, as you can see, with a couple of swing highs as well as swing lows testing that area. Okay, so that's a pretty significant area. So we see price bouncing off this area and we go in for our buy entry towards our take profit over here. Okay, looking at our Fibonacci, if you are not familiar with our Fibonacci techniques, I'll briefly go through them in a little bit when we look at our charts. But over here, we have a 38.2% Fibonacci retracement. So our starting point will be here, ending point here, 38.2% Fibonacci retracement, and then which is in line with this swing low here. Okay, and we also have a 78.6% Fibonacci projection. So that would have 3 points, and you can kind of see the shape here. And our 78.6 lines up nicely with this swing low as well as the previous Fibonacci retracement. Okay, so we expect price to rise to our take profit here. Of course, we are hoping that price will rise to this swing high pullback resistance over here. But of course, there is a strong resistance at this Fibonacci confluence area, and there is a possibility that price might not be able to reach our take profit. Okay, so we see over here that price indeed did react off of the strong resistance area at this partial profit level. Okay, and it reversed off of it instead of heading towards our take profit. So in this case, we were able to get out of the trade with a little bit of profits, even though the trade didn't go according to how we planned it to. Okay, pretty straightforward, I think. Next, we have another example here. In this example, we have our entry level at this swing low support level. Okay, and this is our entry level and is in line with a 100% Fibonacci projection. Okay, so for Fibonacci projections, we are looking for kind of a lightning or flash shape. So like a lightning bolt shape. Okay, and you kind of see that over here if you follow the shape of our our Fibonacci trend lines, okay, as well as the tail of the lightning bolt over here. Okay, so it's in line with our 100% Fibonacci projection, and we are placing our stop loss right below this swing low support. Okay, and our take profit is at this swing high resistance here. But as you can see, it is quite a bit of a distance between our entry and take profit. So we identify a break-even or partial profit area from this from our Fibonacci levels. So in this case, it's not only Fibonacci, we have Fibonacci coupled with a graphical analysis as well, because over here you see that we have 2 swing lows that line up nicely So this makes it a pullback resistance level. Okay, and this pullback resistance is in line with 23.6% retracement, as well as another 38.2% Fibonacci retracement. Okay, so we have two levels lining up with a graphical level. Okay, so that makes it a pretty strong confluence area. Okay, so we've made this area our partial profit area or break-even area, and we are expecting price to bounce up and bounce off of our entry, and head towards our break-even. So you can see once price reached our break-even level, we were able to get out of the trade, but also be able to get a little bit of our profits. Okay. And in this case, because we are using a break-even as well, so not only did we get our partial profits, we are also moving our stop loss to our entry level, so that if it reverses off of this confluence area, we can get out at break-even. Okay, and you can see that that's exactly what it did. Okay, so this is the level in which it triggered our break-even, basically telling us that there is a chance of reversal, and then when it's triggered, in other words, when price reverses off of it, then we can quickly move our stop loss to our entry so that we can get out of the trade at break-even. Okay. Okay, that's all for my slides. Let me know if you guys have any questions, but now we're gonna use the remainder of the time to look at some charts. So if you guys have any requests for any charts, feel free to let me know in the chat. Okay, let me just pull out my charts. Okay, let's go ahead and take a look at gold first. Okay, so as per usual, I like to look at the higher time frames first so that we get an idea of where prices are headed towards. Okay, and you can see that price is pretty bullish over here. Okay, let's look at our daily time frame. Okay, our daily time frame is also clearly on an uptrend. Okay. Um, okay, now let's look at our 4-hour time frame. Okay, you can see that there is a very obvious uptrend here as well. Okay, let's see. So we have an ascending trend line here. Let's see if we have a trend channel. Okay. Okay, now let's go in with our support and resistance levels. Okay, so here is going to be my first resistance. Oh. Okay, just a second, let me connect my mouse. And then our first support maybe just here. Okay, so we always want to try and pull it back as far as we can. And I'm going to place my second resistance here. Here, so firstly, I'm going to go in with a Fibonacci extension. Okay, so for Fibonacci extension, we're basically looking for this kind of shape. So this like tick, Nike tick shape. Okay, so this the tail of your tick has to exceed 100% of the head. So it's basically looks like this before you can use it. And we can see that price did reverse off of our first resistance, which is in line with our 161.8. So it doesn't have to line up exactly, just as long as it's kind of near that area, that's good enough. Or actually, let's take it from here. Okay. Okay. Next, I'm gonna go in with a retracement. So for retracements, we use these 5 levels. Okay, and I can see that my 38.2 lines up with my first support. So I'm just gonna keep that. Okay, now going in with a projection. So for projection, we use these 3 levels, and here I can see my 161 lines up. Actually, if we use this. So you should try your best to follow the shape of the chart as far as possible. Okay, and for extensions, just to recap, you are looking for kind of a lightning bolt shape, as I mentioned earlier. Okay, something like that. Okay. Okay, we have another one here. Okay, I think that's all the levels that we have. Okay, so now let's go in with our indicators. So I'd like to start off with Ichimoku and MACD because at one glance, it tells you exactly what the signals are. Okay, so Ichimoku, you can see price moving above the cloud. So it follows our bullish signal. MACD is also giving us bullish. Okay, and then let's take a look at RSI. Yeah, RSI is also moving in an ascending trend line. Let's take a look at Bollinger Bands. Okay, you can see over here that that it's breaking out of the upper channel. So it's even though there is a reversal here, okay, we can expect price to continue pushing outwards. Okay, we are this reversal could be because of this confluence area here, okay, at our first resistance. So we see, as I mentioned earlier, we see that we want to pull back your lines or your levels as far as possible so that you can see how significant these levels are. And you can see that price has tested this level many times before. Okay, you can see here, managed to break out of it like once over here, okay, but still pretty strong resistance area. Okay, so it's not a surprise that we are seeing price kind of respecting that area right now. Okay, but we're expecting it to still continue in this upward trend. Okay, so that's for gold. Let me know in the chat if you guys have any requests. In the meantime, let's take a look at euro. Okay, So on our weekly time frame, okay, it does look like prices are rising recently. Okay, after this downtrend over here, there is a bit of an uptrend after the 9th of October. Okay, now let's take a look. Our daily time frame also pretty bullish. Okay, you can see. Okay, no. Let's see if we have a channel. Okay, no. Okay, but pretty bullish here as well. Now, definitely uptrend here on our 4-hour time frame. Okay, I don't think we have any trend lines or trend channels, so let's just get into the support and resistance levels. Okay, so this, I think we'll place our first resistance here. Okay, because it's a overlap level, and this price has tested this level many times before. Next, I'll probably place my first support over here. Okay, and then I'll place an intermediate level here as well. So this is my intermediate support level. Okay, and now it's a support intermediate level because it's very close to where price currently is at. Okay, no, I'm gonna place my first support here instead. Okay, so if price reverses off of our first support, then we can go in for the buy entry. My intermediate resistance is here instead. Okay. This is purely graphical, so it's just by looking at the charts and looking at where exactly price has tested the levels before. So after we do this, then we go in with our Fibonacci levels. Okay, so the easiest one to identify is the retracement. Okay, so once again, retracement, we use these 5 levels. Okay, so even though our 50% lines up with my second resistance as well as my 61.8 lining on my first resistance, is no longer valid because price has already broken those levels. Okay, yeah. So I might just keep the 78 for reference. So we can place it here instead. Okay, at these swing highs here. Okay. Now if we zoom in, I think I see another Nike tick shape here. So I'm gonna pull out my 127.2 and 161.8. Okay, and we see that okay, I'm actually gonna move our intermediate level to these 3 swing highs here. Okay, in line with the 161.8 because price has already broken the 127.2 as you see here. Okay, so you can see it's really the first support and resistance placement is purely graphical. We go in and adjust it later on. Okay, my 78.6 lines up with my first support. Oh wait, this is no longer valid because price has already broken out of it. Okay, let's see what else we have. Maybe if we take this big shape here. Okay, my 100% lines up. Even though the 78.6 did line up earlier, as you saw, but price already broke it. Okay. Okay. So we're going in with a buy towards our level over here. Yeah, towards the 161.8. Now let's take a look at some indicators. Okay, price is moving above our Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so all of these support our analysis. And let's see. RSI isn't really telling us much. Stochastic is giving us a bullish signal as well. Maybe let's look at Bollinger as well. Okay, we can kind of see Bollinger breaking above the upper band as well. So it is also giving us a bullish signal. Okay. Okay, we have a request for AUD. Okay. Oh, the Aussie dollar is on a weekly time frame. There is a downtrend, but in recent times it looks like it's been going up. Let's look at our daily time frame. Okay, it looks like it's going up as well. And for our time frames, we saw also looks like it's going up. Okay. Let's see if we have a trend channel first. Yes. Okay. Now let's go in with our support levels. Mm, Here's my first support, and then second resistance maybe over here. Okay, just here. Okay, now let's go in with our Fibonacci levels again. So here I'm looking for a retracement. Okay, I see my 61.8 lining up with my first resistance. Remember, even though this 50% lines up, it's no longer valid because price has already broken out of it. Okay, 50%. Oop, 61. Yeah. And then okay, there is a slight tick shape over here. So let's see if we have any levels. Okay. Okay, but price has already broken these levels, so it's no longer valid. Okay. Okay, I don't think we have any other levels here. Yeah. Okay, so let's just go in with our indicators. Okay, so same thing, Ichimoku, MACD, both giving us bullish signals here. If we look at RSI, RSI isn't really telling us much. Let's look at stochastic. Okay, not really telling us much as well. Let's look at Bollinger Bands. Okay, we see we do see price breaking above the upper band. Okay, so it does support our analysis. Let's look at our moving averages. Okay, I'm gonna hide our Bollinger Band so it's easier to see. So we see price moving above both of our moving averages, but it does look like it's moving below now the simple moving average. Okay, but it's still moving above the EMA, so that's fine. And price hasn't crossed over each other yet, so that's still fine. Okay. So we are seeing some resistance over here because of the Fibonacci, this Fibonacci level. But we're still expecting it to continue to rise up towards our second resistance, following the upward trend and still moving within this ascending trend channel. Okay. Okay. Shall we look at WTI? Okay, so on our weekly time frame, prices are kind of ranging. Yeah, there's no clear trend here. On our daily time frame, it does look like it's dropping. Forwards looks a little bit, I don't know. We do have this price breaking out of this ascending trend line, or rather descending trend line. Okay. We do have price breaking out of that. Yeah. Let's see if we have a channel. No. Okay. So we're just gonna continue our analysis, and then we'll see what our Fibonacci levels tell us. Okay, so firstly here we have our first resistance. Okay, I can pull back my first resistance. Next I have a second resistance, which is just here. Can pull it back. Okay, second resistance, and then lastly, first support maybe just here. Okay, so let's see if we can pull any of these levels back. Okay. Okay, here. First support here. Now let's go in with our Fibonacci levels. Okay, firstly is my retracement. Okay. Okay, my 50% lines up, and okay, my 23.6 as well as 38.2 line up. So let's just keep those. Okay, and then I also have this flash shape here as well. Okay, so we can go in with our projection. Okay, and we can see that my 61.8, ooh, okay, we can see that my 61.8 lines up with my second resistance. Okay, but that's no longer valid because price has already broken it. So let me remove that. Okay, I think that's all the levels that I can identify so far. So let's go in with our levels again. So Ichimoku is giving us bullish, MACD is giving us bullish. If we look at RSI, okay, it's also moving in this ascending trend line, so it's also giving us bullish. And then let's look at Bollinger Bands maybe. Okay, you can see price breaking out above the upper Bollinger Band as well. Okay, so that is a bullish signal as well. Okay. For this chart, I think confirmation would be if price manages to break above this first resistance. So because you can see our first resistance is a pretty significant level, so we will be seeing some resistance over here like we have seen in the past. So if we get and we also have this 23.6% Fibonacci retracement that lines up with it. So if price manages to break above this level, that's confirmation that we can go in for buy towards our second resistance. Okay. Okay. Okay, someone requested for DXY. Okay, this will be our last chart for today. I think that'll be all the time that we have. Okay, so on our DXY, we see prices dropping. I think we have a descending trend channel here as well. But you can definitely see a downtrend here. On our daily time frame, also pretty there is a downtrend, and then on our 4-hour time frame, we don't have any trend lines or trend channels, I think. Let's try. Okay, no. But we can all agree that it is a downtrend. Okay. Okay, so then let's go in with our resistance and stop loss levels. So first resistance will be here. Can we pull it back? Yeah, okay. So our first resistance will be there. And then first support. Okay, and so our stop loss would be roughly about here. Okay. Okay, now let's go in with our Fibonacci levels again. So you can see it's pretty methodical. Okay, 50% lines up, my 50% is no longer valid. Okay, so my 61.8 lines up. Okay. Over here, 78.6 lines up, and so that's my 100%. So let's just keep that. Okay, and I think that all the levels that we have. Okay, I have a 78.6 there as well. Okay, and I have an inverted Nike tick here. So it's like this. Okay. I think that's all the levels we have. Yep. Okay, now let's go in with our indicators. Okay, price is moving below the Ichimoku cloud, so it supports our bearish signal, MACD as well, and RSI and stochastic. Okay, stochastic is moving in this descending trend line. Oop. Okay, whereas our RSI, oop. Let's see. Okay, RSI is also moving in this ascending trend line. So pretty bearish signals here. Bollinger Bands also moving below the lower band. Okay, you can see that here. So also supports our bearish signals. So we would get confirmation in this case once price breaks out of this first support, because our first support is a pretty significant level again. Okay, it's a pretty significant level, and we also, in this case, we have two Fibonacci levels. Okay, yeah, we have two Fibonacci levels, which means that it's a confluence area, which typically would have a bit of resistance in that area. So we are seeing price bounce off of this level. But because of all the downward pressure, we would expect it to continue downwards towards our second support. Okay. 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 Okay, we have a question. How much do you calculate the stop loss and take profit? So it typically is, the general rule for risk reward ratio is about 1 to 2. So you would use a factor of 1.5 for determining your stop loss target. I personally don't calculate based on that. I would calculate based off of the confluence areas as well as the levels, instead of having a fixed number of pips between our stop loss and take profit every time, because for each chart it's different. So you can't really apply the same number for each chart, if that makes sense. So I would just follow this rule where we, over here, okay, where after identifying the resistance area and the take profit and stop loss levels, or the confluence areas, whatever you have identified as a significant area to take note of, then I will go in and place my stop loss beyond it and my take profit be before any major resistance area or confluence area. So I typically will follow this instead of the usual risk reward ratio. Yeah, but if you are interested in that, yeah, I think we have other webinars about risk reward ratio as well. Okay, that's all the time I have for you guys today. Thank you guys so much for joining me. I hope you guys found this helpful, and I will see you guys next week. Have a great rest of your week, everyone. Bye.